welcome to another exciting episode, a special edition of Finance Footnotes. I'm Brent Stransky, your host, with my friend and colleague and co-host Zach Miner. And today we're going to spend some time talking about the major news elements in the political economy. So it's a special edition concentrating specifically on the two major things that have happened in the last 11 days that have really riled or turned up the politics of the moment. So that being
What
said,
happened? Did
just a
something
couple
happen?
things. There were a couple things in the news that you may have heard about. Of course, there was the attempt 11 days ago on the assassination attempt on Donald Trump. And of course, President Biden stepped down from the Democratic ticket on Sunday, Zach. So I don't know if you were sleeping under a rock, my friend, but let's just jump right into it. I think outside of today, which of course is a volatile day, I think more related to earnings than anything else. But I just want to take, per usual, just a litmus test of where we are. So I have a image up here from the Wall Street Journal showing the three major market indexes, the Dow Jones, the S&P, and the NASDAQ. And we can see as of yesterday close, markets were within a couple percent of all-time highs. Things are peeling back a little bit since then, but I think that's important to recognize that markets haven't been extremely jostled by those two particular noteworthy events. And I'm going to bring you in here, Zach, in just a second after we talk about the 10-year Treasury, which I think is even more telling. Here I have the last 12 months of the 10-year Treasury, which of course is being watched by many of those on Wall Street because it's kind of an indicator of what's going to happen with inflation and Federal Reserve policy. And you can see here I have a green arrow showing when 2 Saturdays ago when there was the assassination attempt on the markets, and there was a lot of talk at that time about the 10-year Treasury and what it could do for inflation if Trump was elected. But we can see here, gosh, it's awfully calm. What do you think?
Yeah, no, and I think we may actually get that 2% down day, maybe that we've been, a couple weeks ago we talked about. Haven't had one in quite some time. Down 1.9% at the moment on the S&P. Nasdaq's down more than 3%.
Yeah.
And yeah, I think you're right that there was not too much of a reaction, which is kind of interesting. I think, at least for as far as the resignation is concerned, I think that was, well, not the resignation, the dropping from the ticket. He didn't resign. I think that was pretty much assumed it was coming. It was kind of a matter of time for that one. And the assassination attempt, happened over a weekend. And I think by Monday, it was kind of confirmed it was a, lone gunman type of thing. And so I don't think there was much of a market reaction to it. And
there was some buzz as you read, that Monday, Tuesday, Wednesday, 10-year Treasuries did take up the assumption possibly that there was a more likely opportunity for a second President Trump term.
right.
But that seemed to dissipate, as soon as the inflation numbers came out on that Thursday. So
Right.
I think the takeaway here, at least for me, is that, the market, the earnings numbers as well as the inflation numbers are what are going to continue to drive the markets as we go forward here.
Definitely this week is being driven really by earnings, and also I think it's just we were kind of looking for an opportunity to rebalance and pull back, and it's been quite a low volatile time in the last 18 months, so I think we're kind of looking for that opportunity.
Yep. And we'll talk about that kind of greater context in future podcasts today, talking about the politics of the day. So we've got a couple notes here just related to those two major, and of course, the Vice President Kamala Harris taking the lead on the ticket, presumably. So I want to take a big step and just try to submit some information to you viewers at home so you can kind of discern or glean through a lot of what you're seeing out there in the news at the moment. So these are some of my favorite and Zach's favorite takeaways. I want to start with one of my favorite economists on Wall Street, Dr. David Kelly. He's the chief global strategist from JP Morgan. So he's a big brain on Wall Street, and he's been awfully even keeled over the years that I followed him, and I have for many years. So he did a webinar on Monday to kind of address the concerns or variables in the market from the political perspective. And I thought he had a really telling quote. And this is one of the things I love about him. And he basically says kind of tongue in cheek, hey, ask me again tomorrow because everything's going to change. And he's right. So he says, all of our opinions, and by that he means the commentators, are going to change in the next week or two. But he thinks best guess at the moment, if you forced him, maybe there's a 35% chance of a Republican sweep for the both houses as well as the president, a 20% Democratic sweep chance, and then maybe a 45% chance of a divided government. So his guess is as good as anybody else's. So we'll just have to wait and see what happens. Maybe that plurality of the the divided government might be best for markets. Markets like stability, and so that might be the best possible outcome. But I thought this was a smart guy making his best guess. So
Well, I love those percentages because if you saw that for like a weather forecast, they basically have no idea what's going to happen, right?
it's like
35% chance of rain, could pour, could not, could be sunny. I mean, you really have no idea. So I mean, it's
he's
and I think that's a pretty honestly that's a pretty spot on prediction because you really don't know. You can look at all the polls you want, but we've seen polls be wrong in the past, and I think we'll talk about it a little more, but I think the math certainly favors, at least in the Senate, just who's up for reelection, because it's not like the House where everyone's up every 2 years. The Senate have 6-year terms and they're staggered. So just by who is up for reelection in which states certainly favors Republicans in the Senate. So I do definitely think there's a lower chance of a Democratic sweep, just because of that, just because of the who is up. But yeah,
and
I do agree assigning the largest percentage chance to a divided government.
we'll have to wait and see 105 days as of this recording until go time, and we'll figure out then. So just to piggyback on what Dr. Kelly said during his time on the webinar on Monday, he highlighted 5 key areas that could possibly be affected, and these are all things you've heard about. I'm just going to kind of glaze through them here or burn through them because I think we'll talk about them more as time goes on. But obviously, one of the major primary elements is the tax cuts. Prospective second term President Trump would say something like he wants to extend the tax cuts that he had in his first term, and there would be some deficit considerations, but I don't think they're as big as what everyone said. According to Dr. Kelly, it's not as seismic. They'll have to replace that revenue. We'll see how that happens. I don't want to go into too much detail there. Trade doesn't see much different between President Harris and a President Trump on tariffs, immigration. There are going to be more restrictions either way. Defense, that's going to be more of a Trump thing. He'll probably invest more in defense. And then, of course, monetary policy. I think this is something that's kind of floated up to the top of the news feed. What's Trump going to do with the federal chair, Jerome Powell? He said some things, trying to maybe push the policy one way or the other. But at the end of the day, it's limited on what President Trump can do, according to Dr. David Kelly. He needs congressional approval to replace the chair. And, he has said as much. So those are just 5 high level elements here that we can kind of keep an eye on going forward. Zach, anything to chime in there?
Yeah, I agree. And on number 2, I think goes to the inflation environment, where there's a good amount of inflationary policies on both sides, especially when it comes to tariffs, but also immigration and employment. So I do think that there are some inflationary pressures, really, whichever candidate ends up taking it. So I think that's an interesting wrinkle when you do to consider kind of what the Federal Reserve has been talking about and whether or not they're going to end up cutting interest rates and could have to back off that 4 to 6 cuts next year if it turns out that there's some inflationary policies coming from the federal government.
And we'll have to wait and see. And so I just wanted to start with these 2 slides. Dr. David Kelly, a highly respected brain on Wall Street at the Wall Street's biggest or the nation's biggest bank. And so first was a smart quote from him, and then 5 policy items that we should be aware of. So the other major element, of course, was that now Vice President Kamala Harris is the presumptive Democratic nominee for president in 2024. It's a seismic shift, right? And so I think a lot of the news at the high level, Wall Street Journal, New York Times, were trying to discern or figure out what this means. And so the editorial board at the Wall Street Journal on Monday published, and I'm just going to read from them, a fair conclusion from all of this is that Miss Harris is a standard California progressive on most issues, often to the left of Mr. Biden. Perhaps as she reintroduces herself to the public in coming weeks, she will have to modify some of those views. So, in terms of where I wasn't quite aware where Vice President Harris stood on the policies, but, from the editorial board at the Wall Street Journal, pretty smart group of people. Hey, she's a California from progressive. So we'll have to see if she realigns or reassesses some of those positions to kind of appeal more to the middle, but we'll see. So that was just a small quote from them. Have you seen about the same out there when you've been reading your sources?
Yeah, and it's interesting because she's gonna kind of have to run on the record. There's just not enough time to like introduce a whole new agenda and make a left turn into some things. So I really think that for the next 3 months, she's really going to run on what they've done as an administration, kind of a continuation of those policies that Biden had introduced. And I think that's probably political calculus, because I don't think she wants to be seen as drastically changing kind of the agenda, in the 11th hour. And so it may take, if she wins, I mean, we might not really know what the agenda is until she gets inaugurated, and she kind
She
of
will
does that
have
100-day agenda.
sprint. Yeah.
So it could drastically change once she's actually in there, right? I mean, who knows? I think that for the election season, I don't think she's going to change that much of the rhetoric from what had been already kind of been talked about, in the campaign.
Here's that quote from the Journal. You can see it on the screen here, and they're suggesting that she should or could refine some of her approaches, and I think she's going to have the chance to. I mean, you saw yesterday, Donald Trump said he's willing to debate Kamala Harris several times, which is changed. There's only one scheduled debate with President Biden. That was going to be in October, just 1 month before the election. Very, very unusual scheduling. But now there could be several.
I think it was like September 20th or something like that.
Okay, so it's still unusual.
Yeah.
So we'll have to wait and see. I think there's a lot more to evolve here. Obviously, she's a presumptive candidate, probably likely. There's still some powerful players who haven't yet picked a side in the Democratic Party. We'll have to wait and see what happens. So this is
it's sewn up. Nah, it's done. Once Schumer and Jeffries, I think they were the last two that really, the two congressional leaders. I mean, once they came out and offered their support, in addition to Nancy Pelosi. I mean, I don't think you've heard from the Obamas yet, but I mean, they're not in government anymore. I don't think that the Democratic leaders of the House and Senate would have said anything if they weren't rock solidly sure
I think
that's where it's going to go.
80% or better, 80% chance or better. Which wasn't the case on Sunday. So, all right, we'll have to wait and see. So, all right, so I want to just present some very preliminary statistical data, which, as we always say, statistics are, you can make them sing. This is just a first glance. Okay. This is some polling done by The Economist magazine, which is a newspaper out of the UK, very well respected, and YouGov. Okay. So this is a poll that was done just a week ago. Okay. Maybe 10 days ago. And what they said was, they've been polling what the likability of Kamala Harris, what is the likability, what are the chances if it was Vice President Harris versus former President Trump, et cetera. So I want to highlight a couple of findings there from these, and then I'm going to turn it over to you, Zach. But this is just very preliminary. This is just a starting point as we go forward. So in The Economist YouGov poll, which was, as I said, just a few days done a few days ago, but before President Biden stepped off the ticket. And the question was, what is the approval rating for the jobs in the economy? And I have the title of the slide is, it's the economy, stupid, something we always talk about. The economy drives people's pockets, drives people's votes. And Zach, as you just said, this is what people are going to care about. How effectively can Kamala Harris, president, distance herself from 4 years with President Biden? It'll be important because if you look here, the approval rating for the economy is very low. So this is the Biden issue approval rating for the jobs in the economy, only 39% approval rating. And then if you look at disapprove, 51%. So that's a pretty strong majority of people who don't approve of the economy. Of course, this data is minced and mixed, dozens of ways, but this is just, I have a green arrow pointing to the total. So we'll have to wait and see how that plays out. But I think in general, people, when we talk about this, people are unhappy with the economy, and that typically is beneficial for the person running against the incumbent. Exactly. So we'll wait and see here. Okay. In that same poll, just real quick, likability. This is something that I think didn't get talked about a lot when Trump ran the first time against Hillary Clinton. If you looked at the likability at that point, Hillary Clinton had a very low likability compared to Donald Trump, 2-1 at one point, favorability benefit to Trump. Hard to believe it now, but that was the case then. And I think this is something we should be paying attention to. So this is the YouGov poll. They were asking several, the 1,500 people they polled, what's the likability? And you can see here, there's the total. And there's also the possibility for voters here. So you can see that Trump on the left, favorability score, 45% favorable for likely voters and 54% unfavorable. Okay. And compare that to initial reading here for Kamala Harris. This is interesting discrepancy. In total, 39% approval rating, 54% unfavorable versus voters, it actually boosts up a little bit on both. So favorability increases to 43%. So it's very close, actually. I was kind of surprised to see this. I think it's important. We'll have to follow this. We'll have to see how the debates go. There's been some discussion about how Trump might, use his attack ads, and that will probably not play well for his favorability. We'll have to wait and see. Any thoughts on that before I move to my last slide, my friend?
Yeah, I mean, it wasn't like they swapped out an unpopular candidate for a popular one. They kind of swapped out a very unpopular candidate for a still unpopular candidate.
Mm-hmm. Mm-hmm.
Now running against also an unpopular candidate. So I think it made it closer. At with Biden. I mean, the numbers were just historically bad for favorability ratings and
Very
approval
low.
ratings.
Very low.
And Harris's aren't good, but they are certainly more in line with Trump, and it certainly tightened tightened the race.
You're starting to see some figures come out about enthusiasm, right? And I think there's been a lot of enthusiasm, especially since 2 Saturdays ago with the assassination attempt behind Trump. And there's been some initial readings that the enthusiasm behind Vice President Harris has increased significantly for the ticket.
Yeah,
right. I mean, it was hard to get
absolutely.
enthusiastic for President Biden, especially after the debate
Yeah.
performance. So we'll wait and see. We'll continue to look at these statistics as they come out. But I think this is a really good one to watch. Lastly, I just want to touch on some. And listen, it's far away from. We know what happens to these polls; they're awfully terrible. Especially, I just wanted to highlight here. This is from the New York Times. They've been asking the question for at least a year, over a month, almost a month and a half. What are the polls if it was President Trump versus Harris? Now, this does not include third-party candidate RFK Jr., but here we have initial reading. Donald Trump up by 3 percentage points. What that's worth, only time will tell. It's certainly within a margin of error, it seems like. So just a couple of ideas here for you. It seems like it's going to be a lot closer with Kamala Harris at the top of the ticket than with a President Biden. So with that, my friend, I turn it over to you. What do you think?
Yeah, I'm going to zip over to some investing themes real quick, and we're just going to look back to 1949. We're going to show what growth of 10,000 invested in the S&P 500 through all presidential administrations, as the gray line there, growing to over 3.5 million. Whereas if you only invested during a Republican president or only invested during a Democratic president, you didn't have much money at all. And I think that that overarching theme is that, look, politics are important for, or not even politics, but government is important for policy. It's important for tax policy. It's important for social policy and geopolitical relations, and all that's very true. But when it comes to investing, earnings are going to drive the market forward. There could certainly be shorter term, blips and hiccups depending on a particular president and what they do, especially in a time of crisis. But overall, on a long time frame, your investments are going to be driven by the companies and the earnings and the fundamentals, and we've seen that through administrations going back, almost a century, as being the proper way to frame things.
Yep. Investing for the long term, we have to avoid the emotional decisions, whatever they are.
Yeah, exactly. And then going to kind of what you had mentioned before about, the markets tending to like, split governments, and that's partially just because the markets and companies and CFOs and CEOs like to be able to plan for the future. They want to know that their taxes are going to stay what they are, and the regulatory regime is going to stay relatively consistent, and then there's not going to be any major changes that come down the pike when they're making big investments, or they're looking to acquire a company or hire people. And so it's not a surprise that markets tend to favor split governments. And whether it's a Republican president with a split Congress or a Democratic president with a split Congress, those are tend to be the most favorable investing environments. Whereas it's less so if there is a sweep of either, because that when there's a sweep, that means that there's changes afoot, right? When you have a single party controlling Congress and the president, they can enact some of the more partisan policies that don't necessarily have consensus on the other side. and they can be drastic. They can be, upsetting to the status quo in the markets and can make things difficult to plan for. And so that I think it's just interesting to highlight that, the gridlock in Washington D.C. tends to be better for markets. And a lot of times we end up having a split government, because it is hard to kind of unify, all three, houses there.
So I think for those of you who might not be watching, this is a great chart. What we're seeing here is that on the left-hand side, Democratic president, and then, is it a Democratic, Republican, or split House, and then Republican president, et cetera. And you can see in both cases, this is going back to 1949, so 74 years of data. And what we're seeing there is, 18% annual returns for a Democratic president under a split government. And then under Republican, almost 18% as well. So that's by far the best outcome we can hope for, is historically, as we know.
Yeah.
Can be misleading, but that's what Dr. David Kelly said. His plurality was, maybe up to close to a 50% chance for a split government. We'll have to wait and see what happens, but it's a great chart.
Yeah. And then next, I want to click back to this, because I think we looked at this chart earlier in the year from Ryan Dietrich, where he showed kind of the fourth year of a new president, and the fourth year of their first term tends to be a pretty good year. That's not necessarily true if it's the fourth year in a lame duck presidency. It tends to be not so great in the second half of the year. I don't know what this actually is, because we've got a former
weird
president
situation.
We've got a former president that could be a president again, and then we've got the vice president who could be running for a second term. So I don't know if this is actually a lame duck year, but I thought it was just interesting to highlight, just because it is such a pretty wide discrepancy. I mean, between going from just August until December, I mean, you're looking at like a 10 to 12% differential in those 2 years. So it'll be interesting how the market kind of perceives that. And I mean, today is not a great day in the market, but I thought, because I think we highlighted this earlier in the year, and it has changed. I thought it was interesting to pull up.
Yeah, it's a great chart. But like we said earlier, let's avoid knee-jerk reaction, folks. And the best thing you can do is maybe reallocate if you think it makes sense. Speak with your financial professional. But we're not suggesting any particular action.
This is a very unique year. This particular situation has obviously never happened before.
Yeah.
And then finally, just to look at the prediction markets, because I like looking at the combination of polls.
Where do you find these from?
So the two names are right there. So Predictive is one, and then Polymarket is the other. Those are really the two main ones, where you can essentially place a bet on political events and some other things. Predictive has a... Yeah, go ahead.
Do we have any idea if when these type of, if they're predicting the Super Bowl, are there, are the people that are predicting it right, or is there any correlation?
Well, so this is
outcomes?
So they don't do sport. Yeah, so they don't even do sports. This is all like electoral stuff. Wow. And I'd say they're probably as accurate as polls, but it's kind of just another way to look at it, where because there's money on the line with these, so I think it's a little bit different than just answering a poll, right, where there's just nothing behind it. And it's
so,
just
sorry, just to
data
put you on
point.
would you say that maybe makes it more accurate or less accurate?
I would have to go, and that's a good maybe research project to go back and look at which has been more accurate. These are pretty new. I mean, these really have only existed for the last 6 years. I don't even think they were around in 2016. Might have been the first cycle.
Does that Polymarket say does it say
373 million? Yeah.
My God.
Yeah, so it's not like a couple bucks. Yeah, it's not a couple bucks. I mean, there's some real money on this.
This is so. Well, first that I have is I don't know if this is great for democracy. I mean, it's going to, either way, there's going to be a bunch of cranky people that lose money at the end. Man. Anyway, that's for another discussion.
Yeah. But they both have, a continued spread for former President Trump as still being the winner. I think it's still early. Kamala Harris has not picked the vice president yet. She hasn't really gotten out on the trail. There's been no debates. So I certainly think that these numbers will change. But I have been kind of watching it. There was a huge boost after the assassination attempt. I mean, on Predicted, Trump was upwards near 75, and I think on Polymarket, similar, high 70s, which is pretty unheard of for political, political markets. Usually like a 60-40 is about as, 60-30 is about as much you're going to get.
I can't believe so much has been bet on this. It's just incredible.
Yeah. So I mean, we'll kind of keep an eye on this as it evolves along with the polls, because they kind of tell you the same thing, just like in, just two different ways of getting to that information. And I think if there's a big discrepancy, which in this market there is, you look at the polls, 45-43, or what was it, 48-45. And then you have 63-33 in the betting market. I mean, that's a big difference, right? So it can kind of confirm what you're seeing in the polls, I think. Whereas like, okay, well, maybe because you might look at 48-45 and be like, hey, that's margin of error. It could be really close. But then if you look at a 63-33 in the betting market, and it's like, well, maybe you put a little more stock in that 48, on the one side. So I think it's just another way to kind of confirm and what you're seeing in polls.
Yeah,
But
I
this is
love it.
interesting nonetheless.
I think as the polls become less and less accurate, election after election, tools such as the ones you just showed are going to be more and more important. And of course, these take into consideration the Electoral College, which are probably accounted for in some capacity
Yeah,
for the polling that the New York Times had on the previous slide. But we'll
right.
have to wait and see. So, gosh, just kind of in summary, folks, the point of this conversation was to share with you some introductory facts here about the conversation. The two major bullet points or news elements that happened in the last 11 days have really changed the firmament for the political economy here. We tried to highlight some of the changes that we might expect going forward, and highlight some policy elements about Vice President Harris. And we'll have to wait and see what happens. So please tune in the coming weeks, so we'll share with you more details as they come.